7/28, 2013, 9:02 a.m. Pacific Standard Time. It's on a Sunday. What are we looking at? Our subject is the Dow. It's a weekly chart. Look at the last highs over here when we said that we were going to get that correction and pull down toward that 14,600 area, and we did. So our last analysis for the reversal going into the earnings season and all of the Bernanke stuff that happened, you know, Ben, he got the markets to sell off, right? Rising interest rates, lots of things have played into the Dow. It's only 30 stocks, but we're up here. And look at here. We're making the higher highs, but we're getting exhausted. You had 1, 2, 3. This is the fourth week. This is the main breakout week of this summer rally. It's called a summer rally. That's a seasonality. However, August is going to get quite weaker in volume in about the middle part of August, but going into September, there will be a Dow 30 rebalancing act, September and October type of thing that will happen with money managers. Lots of people will do lots of things. There's an asset allocation model that will take place. The weekly moving average for support in the short term is 15,200. We know that a correction down here to the 20-day or 20-week would be 15,000. But look at what's way back down here. That's a 50-week at 14,052. We're not saying that we're going to go there, but we're saying that we have 2 calendar weeks of earnings left, and this portion of the last part of the top and the price movement serves itself that it's not a buy through like this weekly bar. They bought the dips on a weekly level. That's the 4-week rally. Now, we're looking for a pullback because it would only be healthy. When you look at the daily up here, you can see these daily bars. The price is diminishing. And then you're getting reversals and they're buying the little dips on low volume. So when we close below 15, it'll be 15,527. We won't have any support until, let's say we get, no, it won't be that. It would be, so yeah, the top would be put in. We have to confirm it with a daily bar like this. Now on a 60-minute level on the Dow, you can clearly see where the distribution bars were. You can see where they bought the dips, but you can see where they failed. So as we start, and we're not back above the high, but we did have a pullback from 15.6 right down here to the very lows. On this calendar date, that low was 15,405. And we bounced right back up here to a major area of resistance. So the price volatility is already starting on a 60-minute level. So it could take a number of days, but to verify the Dow having its pullback phase is that it has to start with the gap down and open and pre-market. The futures have to be down. And then on the opening bell, you have to gap down. But when they bounce right now, this is the phase where they're buying dips in the broader leadership of the Dow 30 component. So the leadership stocks in the Dow are the only ones that we trade. So those are the ones that are providing these 60-minute bars because they're buying those names. But that's okay. We're at the resistance level. I'm going to conclude that the Dow is ready for a pullback based on the highs would have to diminish in price. They get weaker at the highs. And there just isn't enough volume and buyers in the broader Dow 30 to make another big weekly breakout. It has to start with a reversal like this. When we called this top back over here, stock market funding. Yeah, we did. Go look on our YouTube channel. You're welcome to go to the website and you can go back, get these calendar dates, look at what we said and why we were going to get the correction. Because we did. And that's what bulls should do. And up here, going into August and 2 weeks of earnings left and part of September and October, is we're due for another pullback so that you could have your fall rally and your Christmas rally. If they really want to take this bull higher, you will get pullbacks and then go straight through January of 2014, and the bull would continue to go higher. Remember that this bull run started 4 years ago. Well, it started in, well, let's just call it March 1 of 2009. That's when it started. And now we're in calendar 2013. The problem is it's a profitless rally. Earnings growth is not on par as good as it should. However, if corporate America here in the U.S. can start to get more earnings on the top line in places like Europe where they sell products and around the other world in emerging markets, and those could come back on board, well, the bull could go higher for a while. But that's what they're going to have to do. So every pullback will be viable. And every major support level, and there's a lot of money on the sideline, and a lot of people have sat out all of this rally. And so we have seen money start to come back in the market a little bit. There could be some more, but you see, most people won't be big buyers of things unless, number one, that with the 2 weeks left in earnings, that the valuations are good. They can buy those dips in individual names in the Dow 30. And or you would pull back as a broader group, and the leadership in the Dow 30 that has the best year-to-date growth rate would be the ones that you would want to buy. And so, because they would be the leaders in the Dow 30. And there's at least good 3 of them that you can trade. I'm not going to go over that. And that is the conclusion going into Monday on 7/29. Then starting the month of August. Do they come in and buy it and push it up? But each high has a reversal. Each market high, when they put in the high, it has to have a reversal and break the previous day's lows to confirm.